So I suppose we might start. I know people have busy days and have a lot to do. So first of all, my name is Donald O'Leary. I'm managing partner with PKF. Most of you will probably know me. Um, so I suppose we're delighted to welcome everyone this morning to have a chat through advising business on surviving uncertainty, and I suppose to have a look at what supports are available, what challenges are available for people, and also to look at how we can manage our people more effectively if possible going forward. And I suppose I'll be joined on the call this morning by David Lucas, our corporate finance partner, Shane O'Donovan, our tax partner, and Marina Lahan, who is a professional business coach who works with Business Works Consulting. And we thank in particular Marina for joining us this morning to give her input on the people side of how this crisis is going to affect people and the challenges and opportunities going forward there. So what we're going to do this morning, we're going to have a full question and answer session at the end of the presentations. So if anyone has any questions, there's a chat button available to you. Please type in your questions, send them on to us, and we will answer them. If there's any that we can't answer, or we're struggling to answer, or we haven't got time for, more importantly, we will go back to you after the presentation this morning. We'd also welcome any observations that people may have of their experience so far, their expectations on how the economy and their businesses are going to open up, and the challenges that they have going forward. Please type those in as well, because they'll add to interesting chat and discussions that we can have on the call. We're going to be running some polls throughout the call just to get some feedback from yourselves, primarily to see that you're awake, but really is to get some feedback on the challenges that are going, you see, facing yourselves going forward, and also maybe some opportunities for further calls going as well. We, as always, PKF and the partners and staff are available to you if you need us, either by phone, by email, any way you can. We're here to help. We're here to build your businesses back to what they were in the past, and even better in the future. So we, if you haven't got time to chat or to ask questions this morning, please feel free to contact us at any stage going forward. As I said, we thank you for joining us this morning. I suppose, like all major world events, they bring change and challenges, and I think that this one will be no different. We have to be ready for those challenges, and we have to be ready for the opportunities that those challenges may bring for many businesses going forward. So I suppose, looking at where we're at, the format for the discussion, we will have David speak to us first, then we will have Shane talk to us, and then Marina, and a question and answer session at the end. We expect the call to last about 45 minutes to an hour, and we hope that it is engaging as we go through it. So firstly, I suppose, just a few comments from myself. We're in a period of rapid and widespread and significant change. I suppose, I don't think in world events something has ever happened so quickly, where one week everyone is working and society is functioning as normally, and the next week it's closed. We're told to stay at home, we're told not to go out. And I suppose the emotions that brought us, and in particular, I suppose, in the circumstances, it brought us some challenging emotions, because we had those, it wasn't just financial, which you'd expect in such a shock, and in previous economic shocks, it was mainly financial. But, this brought us, we had the health impact, the worry that, we may get the disease ourselves, that our families may get them, that someone connected to us may get them, and the emotional impact that brought as well. And they were huge challenges that landed on us really overnight. And They caused a lot of people a lot of stress very quickly, and worry as to how to deal with them. And I suppose if you look at the graph that's on your screen there, it just shows the various aspects that we have to go through, from the psychologists, and I suppose shock and denial, into anger, bargaining, depression, and acceptance. So I suppose we're probably only in the shock and denial stage at this point in time. So we have a few different stages to go through, and different people will go through them at different paces. I suppose that's our challenge, is to get through them as society, and to get through them as individuals, and to get through them as businesses, the whole way through, so that we're in that acceptance phase, and that we're coming out the other side of the challenges that have been foisted upon us at this point. What it has done is it has changed society, has changed people's views on societies and the views on what's important to them. And I suppose in a recent survey that was carried out by Genesis Consulting, we just see, what people's intentions and how they've reset their priorities. And interestingly, I suppose if you look at the increasing priorities, a lot of them are social, their family, their health. They're increasing your dietary requirements, your exercising. And these are things that people have been doing over the last 3 months and continue to do them. And on the other side, the decreasing priorities, is buying clothes and fashion, luxury brands, buying cars and houses. I suppose it's natural that these would decrease in a time where there is worry and anxiety in society. I suppose a lot of those things weren't available to us as well. So it'll be interesting to see how that graph changes over the next 12 months. Will people's priorities change? Will this be a change that will resonate going forward? Or will there be an adaptation back into some of the values that were there in the past? So that's something that we'll watch carefully going forward. But I think that any event of this scale will change people's values, and we have to be aware of that in our business world. And I suppose, where does that leave us at this point? I suppose at present, we have a canvas which shows that there's uncertainty and volatility. There's been significant change at a very fast pace. There's new values that have been shaped, and new narratives are being defined. And the other, also, there will be new values created that we aren't even aware of at the moment. So I think we have to accept that society is unlikely to go back to where it was, that there is a new normal coming, and that we need to shape that new normal, and we need to be ready for it, and we need to embrace it. I suppose we need to reimagine, not recycle, reframe, not rewind. We don't want to go back. We want to use this as an opportunity to bring society forward, to bring our businesses forward, and to make sure that our businesses can operate even more successfully in the future in an ever-changing world. I suppose, how do we get to that point? I suppose some of the key things that are there are that we need correct information. We need timely information. It needs to be on front of us, real-time, correct information, so that we can make good decisions, and also that the decisions that we're making, we can go to other people and we can show them those decisions. And if we need banks or other financial institutions or revenue or whoever it is to help us, that we have the information in front of us. So that's going to be very important. We need to have a new mindset, and we have to imagine that mindset, that it provides opportunities and solutions to existing problems, and it does, and that is what we have to work with. I think the key is going to be an agility and responsiveness, and using our entrepreneurial spirit to build our business. It's a regeneration. It's a new beginning for us, and I think that we have to accept that, we have to embrace it, and we have to look at it as a massive opportunity for all ourselves to reshape our business lives and our social and personal lives as well, and to understand that society is going to change, and that we have to adapt and change our businesses to cope with that. So I suppose the first thing we're just going to look at is we're going to run a poll um, just before David starts speaking in relation to some financial matters. And I suppose the poll that we're running, and you'll see it there on your screen, and you can tick any one of the 4 boxes. And I suppose it's just looking at what would be your biggest challenge when returning to the workplace, when business reopens and society reopens. You know, is the reopening itself going to be a massive challenge to us? Is, you know, getting our offices, our workplaces ready to be able to cope with the COVID restrictions and requirements, to make sure that we have everything in place to make sure that the health aspect of it is dealt with correctly. Obviously, cash flow is going to be a huge issue. Businesses are going to be looking at in a challenging environment going forward, and after a period of 3 months when all the taps were turned off suddenly, how do we manage cash flow going forward? How do we manage to create businesses that are profitable again and that will create positive cash for ourselves? Team engagement, you know, is it going to be different? Are we going to have to engage with our people differently? Are we going to have to make them use of the different experiences and gain from the experiences they've had over the last 3 months to get that engagement on a different level to bring them with us? And also then, by changing technology, I think the whole aspect of how the work environment changed so quickly showed that changing technology is going to be absolutely vital. And we talk about 20 steps forward in a day that, you know, weren't there before. So that's going to be something that everyone's going to have to embrace. So thank you for completing that poll. And I suppose now we'll get David to give us a chat about the cash flow and corporate finance aspects of it. I suppose just to introduce David. David has joined us recently as a corporate finance partner. He was previously with Mazars, and he also worked with AIB and Deloitte. He's huge experience in debt raising, in equity financing, and in acquisitions and disposals of businesses. And he's going to talk to us this morning about sourcing finance, what is available through the banks and through government agencies in this challenging times, and how we need to have information available to be able to source that finance and the timeframes in relation to it. So over to you, David.
Thank you, Donald. Good morning, everybody. Delighted to speak to you this morning. As Donald mentioned, I'm new to PKF. I'm in my 2nd month. So like many people, we've all been working from home for that time as well. So it's quite an interesting time we're all in. Donald gave me a brief introduction there. I'm an ex-corporate banker. I've also worked, and I've been working in corporate finance the last 6 years in both debt advisory and merger and acquisitions. So very much what I've been doing is working with owner-managed Irish businesses throughout any kind of need they may have from a corporate finance perspective. So raising capital, raising debt, buying and selling businesses. So everything across the structure. So I look forward to speaking to you today on the various challenges that we have. And I've put a brief kind of small agenda together here for this morning for my piece, which is really talking through a few of the schemes that you're probably very well aware of already, but I'll touch on them. A few cash flow tips as you look to try and set your businesses, get your businesses back up and running, or basically be able to manage through this difficult time. Also, I'm just going to touch on what we've been doing with a few of our clients and how we've been supporting them. Just to give you a couple of examples. Then just want to talk about the banking and capital markets. So it's basically what are lenders looking for? What are they looking for when you approach the lenders? Because obviously a lot of businesses will have debt and they'll have to negotiate with banks and see how they operate. Then I'm going to touch on the various banks and alternative lenders that are out in the market. And finally, just touch on the private equity market, which has been very active in the last 6-7 years in Ireland, which is obviously a new and possible capital available to you as well. So if you touch on the next slide. So this is very much, lots of these schemes have been put in place over the last while. The credit guarantee scheme, the government have obviously when COVID hit, had to make an awful lot of moves to try and support businesses and support the economy. You'll be well aware of a lot of these schemes that are in place, so I'll touch on them all briefly, and I'm happy to answer questions at any stage towards the end as well. So the credit guarantee scheme, that's in place by the SPCI who run it, but the very important part of this is it's actually the banks that provide the credit. So it provides a guarantee of 80% of the debt that you take from the banks, but it's very much a scheme where you apply to the SPCI. They may approve you, but it's still the bank that has to give you the lending. So the bank still makes the decision, still goes through all the various rigors that's associated with a cash flow lend to a trading business or to any business. So it's not like you get through the first, and it's a bit of a, and the stats are there's been almost 3,000 applications that have got through the first stage of SPCI, but haven't been able to access the capital because the bank still has that credit decision and they still have to be prepared. And I'll touch on it later on in a future slide on how to approach the banks and how to access that capital. But certainly the SPCI helps and helps to try to access that capital, but very much the lend has to stack up from a banking perspective to be able to access that money. COVID-19 working capital scheme is very similar, and again an SPCI scheme, but the funding again comes from the banks. So the government scheme has put aside a bundle of capital for the banks to use to support businesses. But again, it's a two-step process there to try and access that money. And it is available and very much has been a lot of money has been deployed to date, and it's available to any business. The Future Growth Loan Scheme is again another scheme that's available that can fund CapEx and fund R&D spend specifically to try and help you spin your business or move the business onto another level. So again, it's another scheme that's very useful to yourselves. Microfinance Ireland, again, for the smaller sized businesses, they've been very active in the market, again, supporting businesses through COVID-19. And finally, the Enterprise Ireland Sustaining Enterprise Fund. Again, Enterprise Ireland have a number of schemes which I'll touch on in the next slide as well. But Enterprise Ireland Sustaining Enterprise Fund is funding like debt up to 800,000. It isn't an interest rate that you pay. It's actually back in the last bit, but it isn't an interest rate you pay. You pay a 4% admin fee per year. You don't have to pay back the money until after year 3. But again, any of these kind of schemes can be designed or to your needs. So again, once you've got approval, you can pay back the money by year 5. But it's very much supposed to be designed to give you capital when you need it now to sustain and to keep alive, and then look to restructure and repay at a later date when you're up on trading. So on the next slide, there's Enterprise Ireland. There's a number of schemes and grants that have been available, and PKF are an approved financial advisor with Enterprise Ireland. And there's a number of these schemes available. So the Retail Online Scheme is a scheme of up to 40,000, which is designed for retailers to try and build an online platform. Obviously, a lot of businesses have had to start trading online because they've been closed. So Enterprise Ireland again stepped in to try and put this scheme in place, which is a grant to help develop that side of the business. There's a lean business continuity voucher, business financial planning grant, which again is a scheme of up to 5,000, which is payable upon producing a financial report, like a detailed financial model, which we've been helping our customers and clients with. Cash flow analysis, basically running through your entire business and building out a very robust model which can be used to again attract funding and seek funding at a later stage. There's various other lean business improvement grants is another one that is available. So the IDA and Enterprise Ireland also have a business progress improvement grant, which is again has been very well received. The local enterprise office, so the LEO grants, which is very similar again, just slightly down the size of business, have been extremely active. So a business restart grant, for example, is a grant between 2,000 and 10,000. There's been 20,000 applications so far with 15,000 approvals. So they've been very active in getting that money out the door to again support businesses. So your local enterprise office have been excellent and active. Trading online voucher, again, similar to the retail online that Enterprise Ireland we're talking about. Again, there's been 3.7 million deployed in this particular voucher service. So there's been 1,600 different cases of where the money has been deployed. So again, the Leo, excellent to support, and I'm happy to talk through any of these schemes with you at any stage. So to the next slide is really some cash flow tips. You may have seen this before, but we focused on 4 different elements, which is working capital management. So stock, debtors, creditors, and cash. So within your stock cycle, again, how you have to think about on a weekly basis where your cash. So it's cash that helps you run your business. So can you get rid of obsolete stocks, try and sell it off to try and realize cash quickly? Can you try and collect your debtors quicker? Can you try and stretch out your creditors? There's various different schemes that are available. So one example on the creditor management side is the warehousing of revenue, and Shane will touch on that later on, where the government are allowing you to defer some of your tax liabilities, which again helps with cash flow. Then maybe on the cash management side, then there's obviously working capital needs, and we're going to touch on how to approach the banks on a later slide, trying to access that capital and access that cash, which can help you manage through this quite difficult time. So how have we in PKF Corporate Finance, have we been supporting our customers? It's really early engagement, trying to speak to, at the moment, if you have debt or you have a lot of businesses have gone into have had to shut down or have had to trade differently, and therefore have taken up a lot of the schemes we talked about, or the wage subsidy scheme again, which Shane will touch on, to allow that you survive. So how we've been working is helping our businesses and our clients develop business plans to go and approach the banks, to conduct independent working capital reviews, to look through the requirements that you need to try and stay alive, and certainly very importantly to how when you get back open and running again, do you have enough working capital? Do you have enough cash to be able to do that? Because like a lot of businesses, and we're talking to a number of businesses at the moment, that business isn't going to go back to 100% straight away. It's going to be 30%, 40%. It's going to build up over time, but you may need to kind of rehire all the staff straight away. There may be upfront costs straight away that need funding, or to stock up the shops as they reopen, depending on what sector you're in. But certainly we've been working to try and build out those financial models to approach banks. The next point is the financial modeling. So to build a very strong, robust financial model, which again can be sensitized if you don't hit your exact numbers, what effect that has on your working capital and your cash flow at the end of the day, which is key to running the business. And we assess repayment capacity in a banking case, like many companies, because they've been because they haven't been able to trade, their debt levels remain there. The banks are putting in this moratorium where they're allowing you not make capital or interest for a period of time, which has been extended, maybe a 3-month, and it might be extended for a further 3 months. At the end of that day, where are you when you're back up and trading? Where's your repayment capacity? How are you going to finance that? So there's a lot of questions that we've been working with our clients with, how to build that out to try and survive and try and get to a position where you can handle and repay that debt over time, and maybe it's over a longer time period. So it's not over what you currently have in your existing docs. And we help review existing loan docs and work through covenants. So at the moment, the covenants, and I'll touch on them later on, are there to control the loan, and all banking facilities will have a suite of covenants that needs stepping through, and especially in this troubled times and difficult times, there's going to be more and more breaches of those covenants, and the banks understand that. We run then a competitive process to try and find the best financing structure to support the business going forward. And as I touched on earlier, we definitely help with the negotiations with the banks, so we can step into that movement. But again, moving quickly and early negotiation and early involvement with the banks is key here, and open communication is key, because they want to help people, and they're incentivized by the government to help people manage their way through this and keep the economy alive. So they're definitely, everyone's aligned in that respect. So it's really about how to present the case to them on how, on survival. So the next page on how do you approach lenders. So the basics in what we work on the debt advisory side in PKF, how we work with our companies is, if you're looking for a new loan, it's probably it's the exact same metrics and exact same thinking as a restructuring of an existing loan. So the bank will look at what are the earnings potential. They'll look at historic financials and historic projections to prove future. So it's, if you're doing a 30% gross margin, you can't just show them projections showing a 65% gross margin out of nowhere. So it has to be, it sounds obvious. So the historics will prove the future. Obviously, there's been a huge dip in trading for a lot of businesses through COVID, and we're going to just manage and show how we're going to get out of that and build a robust model. They look at the quality of the management team, the existing management team, and they'll also look at the future investment requirements of the business to continue on, and where the growth potential here is in the business. But very much on a positive stance. They're there to support you. They're there to support. If you have a business plan, the banks will very much be there to support you. And then the impact on repayments. So again, I touched on it earlier. We'd have to assess that. So just below the schematics are the debt covenants. So there's two of them here: debt service cover ratio and interest cover ratio I've mentioned here. There's also one a leverage ratio, which you see tested quite a lot. The DSCR is how many times your cash generated can repay your interest and capital. So this is quite a difficult one to manage, and probably the most challenging one for a business to manage. So it's really all about cash. So it's cash is what repays debt, and so it's very much a really important one to watch and be very, very careful with, in terms of following the covenants and the various definitions in the loan documentation to ensure you're hitting this, and in any restructure to make sure that it's documented in a way that you can actually make sure you don't trigger covenants and that you follow the plan that you have in place. So the bank wants to work with you on that, or whatever lender you have will want to work with you on that. But it's a really, that's probably the most key one, is the debt service cover ratio. Just I'm going to touch on a few of the lenders out there. So the banks, you'll know about the three major banks, and I just have a small slide here which kind of shows their typical lending range, and this is typical before COVID-19. So where they would get comfortable with normally is around if you see the table below, around the 3 times to 3.5 times leverage. Their interest margins 3 to 4%, and their amortization is pretty much straight lines that are paid back over a 5-year or 7-year period. That's the general kind of terms. Now, all deals are negotiable and can be structured in a different way. In the way I look at this is, in the future now, the banks will be more flexible. Perhaps you can extend your debt over to a longer period, or front end, or back end some of the payments to the larger capital repayments. You're making smaller payments in the early years and larger payments in the latter years, which takes the pressure off this key point, which is right now is when you're not at your highest earning potential. You're just getting back up and running after COVID. As I said, you're at 30%, you're not at 100% yet. So you early on, you just need that flexibility from the bank. So again, it's early communication to try and get that. And I've spoken to all the banks recently. They're very much the same message comes back, which is we are very, very, very much open to supporting. We're very much open to supporting businesses, our clients. We just need early communication and an early plan. So come to us with an early plan, or whenever the plan is ready, and we will be there to support. So that's the message I'm hearing. So it's really about getting that prepared before going to the bank. And I'll just go on to the next slide is the alternative lending market, and I'll touch on this quickly. These guys have been around for a long time. In Ireland, they're effectively both on corporate cash flow and property. They will lend more money probably than the bank. They'll have increased flexibility in terms of allowing dividends out and allowing cash off the table, like equity releases, but they do charge a higher interest margin. So again, these are a few players that are still in the market, and they may be the solution going forward for many customers. But I just thought I'd put this up and just show a few of the logos for like on the property side. There's a number of new players. Again, they'll lend more money on a loan to value basis and perhaps do it on an interest only basis. It's just more flexibility again than the senior banks. But again, it's just another option available to you. One, invoice discounting is actually a very, very popular source of finance. And again, it comes back into supporting businesses from a working capital perspective. And the reason banks love it and lenders love it is it's increased security. So they actually have security over your debtor book. which ranks ahead of the revenue and ranks ahead of every unsecured creditor. So they will lend a percentage of that debtor book, and it depends on the percentages, the approved debtors. So again, you can take a credit insurance with a Tradius or one of the other credit insurers, which will again improve that approved debtors. So again, invoice discounting is a very popular, can be a little bit onerous for customers and for clients. But again, it's plenty of players. The three banks are doing it, and there's a number of other players in the market who again will do things a little bit higher than the banks, a little bit of increased flexibility, but again, you'll pay a premium for that. So the banks might be paying 4%. These guys are around 6, 7, 8%. So the guys just below them in the diagram. My last slide, Judy, I just wanted to touch on private equity. So private equity, again, they can provide capital where the banks or alternative lenders, it's just an option versus banking or alternative lending. They provide capital, they take a percentage of your business. So instead of, and it can be on a minority stake, so under 50%, or a majority stake over 50. Again, where private equity works really well, and it's new enough in Ireland. It's new in the last 6, 7 years. There's been plenty of private equity in the UK that have looked at Irish businesses, but over the last while, there's more and more players, specifically in the Irish market. So the advantage of them is capital available straight away. They also bring more than just the capital. They bring a financial know-how. They sit on your board. They open doors for potentially acquisitions. So they have growth funding. Then they provide the capital for potential acquisitions. They'll help you move into new markets, opening doors into the UK, for example, or synergizing with other portfolio companies they may have. So they may own companies in the UK or other jurisdictions that are directly in your space and can help open up those doors. So again, it's just another option as well. So like many people used to say, owning 100% of some sort of a business making 2 million quid is not as good as owning 70% of a business making 10 million quid. It's the obvious maths. But it's more than just the capital. You want to know what these guys can do to open doors and really help strengthen and solidify the business. Some of the disadvantages, obviously, you lose ownership, and you lose the potential that there is a loss of control. So even if in a minority stake, they'll still want certain control and voting rights on the board to be able to control what you do. But that's why it's so key to pick the right partner, so you can so you end up in the best situation that can help grow your business, because it is your business at the end of the day. And there's plenty of these players, so it's about picking the right strategic fit. So a couple of, just on a few logos before I finish up, just a few. The Broadlake, for example, they invested in Merlin Showers and 2468. You might see vans around the place. So they're very, MML invested in low refrigeration. Just to give you a couple of names, Melior are a new private equity spin out from Cardinal Carlisle, and they've entered the market and raised a fund recently. So there's a lot of money available to deploy, and maybe now is a time where you can only get a certain amount, and to be able to access more capital to take advantage of opportunities is another private equity could well be the solution there. So delighted to answer any questions at the end, but I'll hand you back to Donal now. But lovely to join you all on this webinar, and I'll speak to you soon. So Donal, you're on.
Thank you, David. Yeah, sorry, I was on mute there. Thanks for that. That's very interesting. And I suppose the key points that I take from that is that early engagement is vital, and to have up-to-date and real-time information and projections. That in order to put your business plan together and your projections, you have to have your historical information up to date to be able to support what you're looking and asking for financing going forward. So that's very helpful, David, and we'll probably have some questions for you at the end of the session. I suppose we want to move on now to revenue matters, and Shane O'Donovan, our tax partner, one of our tax partners, is going to talk about them. Shane has been with the firm for 13 years, and he specializes in corporate tax and tax restructuring projects. I suppose over the last 3 months, he's spent a lot of time in looking at what revenue have put on offer as such for businesses, and have help business support them to get through the difficult 3 months that were there. And I suppose looking forward to the next 3 months and what has been made available. So maybe over to you, Shane, and you'll just give us an idea of where revenue are at the moment.
Thank you very much for that, Donald. What I'm going to go through this morning is I'm going to go through the wage subsidy, which is the employer supports that have been introduced by the revenue, which is really the main relief or package that has been introduced. I'm going to go through the debt warehousing that has been introduced more recently, and finally finish off with just a couple of other items where they've extended deadlines and pushed out requirements generally. So the first area I'm going to go through is the two employment supports. First one is the pandemic unemployment payment. This is a payment that it was introduced at the end of March. It is aimed at individuals who have been temporarily laid off or fully laid off. They are no longer on payroll. During phase one of the scheme, it was a €350 payment. You will probably have seen that there were situations where part-time workers were receiving more than what they had been. So there was a little bit of controversy around that. They have now dealt with that, and during phase two, that is being changed, where an individual who is earning over €200 per week previously will still receive the 350 payment, whereas anyone who is receiving under €200 will now be brought down to the equivalent of the job seekers rate, which is 203. You may also have seen that towards the end of last week that has been extended until the end of August, which is helpful. It's envisaged that the scheme will reduce down as people start to go back to full-time employment, and that people will transfer across to the wage subsidy over the next number of months. The total cost of the scheme at the moment is circa 1.9 billion, which is a considerable amount, obviously. And there are checks being carried out by the Department of Social Welfare at the moment to make sure that people are correctly claiming that, because there are some anomalies around when people were employed and the entitlement to claim it. The second scheme we have is the temporary wage subsidy scheme, which has been, from an administrational point of view, the more difficult scheme to administer. And this is the scheme where individuals stay on the payroll. The employer administers the payment of the subsidy, and the revenue commissioners refund the subsidy. And similar to the pandemic unemployment scheme, it was introduced at the end of March. It is based on the average weekly net pay of an individual for January and February, which has caused issues both in the initial phase of the scheme and also now, where people are coming back to work. The main issue we see now is that people are keen to get back to work. They're working overtime, particularly on building sites, to try and catch up with where they were. Their employer has elected to claim the wage subsidy, so the hours they're working now don't quite tie into what their entitlement is under the wage subsidy, which means that employers are potentially receiving tapered relief or no relief at all. So that is an area where people need to be very cognizant of how much the individuals earned in January and February versus how much they're paying or how much they're earning now. The main criteria around the scheme is that the employer must have been negatively impacted by COVID-19, and the guidance on that is that there's been a 25% drop in turnover. And there are a number of metrics. You can compare that to Q1 and Q2 2020, or you can compare it to projections for Q2 2020 or the prior financial year. And no guidance has been issued at the moment in relation to whether the 25% drop will be extended to cover Q3 of 2020 with the extension of the scheme to the end of August. So we are currently waiting on revenue to issue guidance on that. Some of the operational issues around the scheme, there was problems with maternity leave, people who have been on parental leave in January and February. If they weren't receiving income in those months, they didn't qualify for the scheme. So that issue has now been sorted as of last week, and will apply from the 12th of June, that any individuals who are on parental leave will be entitled to claim the wage subsidy. And similarly, there has been issues around the operation of BIK for employers, and how it works with notional pay as part of the calculation of our average weekly net pay. So as of last week, the revenue commissioners have come out and have confirmed that BIK should be split over the remaining pay periods in 2020, once an employee comes off the temporary wage subsidy. I'm happy to take any questions or queries that people have on those. But moving on to the debt warehousing scheme. So this is the scheme that was initially introduced in April. The scheme covers, for VAT periods, it covers from January to June, and for PAYE it covers from February to June. And initially this applies automatically to SMEs, and on application for larger companies, and businesses are required to continue to file returns throughout the period. And the total cost at the end of April was 1.3 billion. They have now moved the scheme forward, where they are going to warehouse the debt for both the initial period of the scheme, and then also the second phase of the scheme. So for 2 months after reopening of the business, they're going to warehouse debt into 3 phases, which I've noted on the slide. So the first phase is the restricted trading phase, where you're either closed or you're trading at a restricted level. There will be no interest applied to any liabilities that arise during this period. The second phase is a phase where you're reopened, and the first 2 months you won't be charged any interest in relation to, or there'll be no debt collection for the first for the first 2 months of phase 2, and then there will be a 12-month zero interest period. The final phase of it is a 3% interest rate will apply to the liability. So basically what this means is that companies will be able to warehouse their debt for interest-free for 12 months, and then at a rate of 3% thereafter, until the debt has been repaid. The warehousing of debt will not affect a company's tax clearance, nor will it affect any refunds that a company may be entitled to. So for example, if a company has an employer's PAYE liability and a VAT refund, you'll still be entitled to receive your VAT refund for the period. You can opt to offset it, and the key criteria on this is that you continue to pay current tax once you reopen. So finally, I have just a couple of extra bits that are other schemes. So on the closed company surcharge, typically the closed company surcharge, if you don't make a distribution within 18 months at the accounting year end, there is an obligation to pay the closed company surcharge over to the revenue commissioners. That has now been extended for a further 19 months on application to the revenue commissioners. So this is particularly relevant for landlords who have corporate entities where they might be experiencing difficulties with tenants at the moment. If your tenant isn't paying at the moment, then you should be able to qualify for the extension for the purpose of the closed company surcharge. If there are any companies who have that issue, they should contact us, because you do need to apply to the revenue for that. The second one we have is the research and development tax credit. So strictly speaking, the research and development tax credit isn't refundable until after 9 months after the accounting year end. The revenue now brought that forward. So if you submit your corporation tax return early and you've included your R&D tax credit on the corporation tax refund, they will allow the refund. What we have found in practice is that they are still raising the normal aspect queries and looking for backup and supporting information. So it is only really bringing you into the second phase of getting the research development tax credit refunded. It's not an automatic process. The third one I have noted there is PSWT interim refunds. They are now, if you submit your interim refund claims, they are now automatically refunding those claims. And previously it had been quite difficult to get an interim refund processed, and generally you ended up waiting to the end of the year to claim it as part of your corporation tax return. And then finally, just in the last 2 points, none of this debt warehousing or non-collection of tax will affect anyone's tax credit or tax clearance certificate at the moment. They have suspended all reviews of tax clearance certificates at the moment. And then on the charities and VAT compensation scheme, they've extended the deadline for submission of that to the 31st of August from the 30th of June. So I'll hand back to Donal with that.
Very good. Thank you, Shane. That's very interesting. I suppose the key there is that revenue are supporting. They have a lot of initiatives to support business, and the wage subsidy scheme is particularly important and particularly beneficial. I think all companies and businesses should review and make sure that if they're available to that they should get it. And then the warehousing of tax is obviously a new initiative. Is going to be very important for SMEs in particular. I think SMEs under 3 million turnover will automatically qualify, and other companies will have to apply to revenue if they want to qualify. So again, those are two very important things. So thank you, Shane, for that. And now we're going to move on to Marina Blahan. And Marina is MD of Business Works and is a professional business coach that specializes in leadership training and employee engagement. Marina builds strategies that gets everyone behind a culture of positive accountability. Marina has worked with PKF and its clients for a number of years to very good benefit for all. I suppose this morning Marina is going to share her strategies on how you can lead during uncertainty and manage your company culture remotely. Over to you, Marina.
Great, thanks Donal, and thank you Shane and David for great insights again, great learnings even for me as a fellow business owner. Today I'm delighted to introduce you to, have we got the slides on the move here? We do. To our team, Business Works Consulting, and we exist because being in business should actually give you more life. So you get to manage the money part of it, make the plan for success, all of that in terms of wealth. But sometimes, and we saw it validated there today, sometimes it's just difficult to manage your people, whether it's remotely or indeed in the office. So it's all about changing the culture. We've heard from everybody and we know that the culture in business and economics worldwide has changed overnight. So the game has changed. So more than ever, it's about how you show up as a leader. It's about building that culture of positive accountability and making it a positive thing, not a remedial thing. Culture is important. We'll talk about that. And I'm going to share two models and engagement. So talking about how engaged your people are. This is something, no more than debt, no more than owing money, no more than having to refinance. It's really, really dangerous to ignore the people element of the business, which is why it's great to be here with the guys this morning from PKF. Donal mentioned it earlier on, people were in shock and denial at the start of this. It just was a thunderbolt from nowhere. This is Maslow's hierarchy of needs, the basis of psychology, where people first and foremost want food and shelter, survival. You can see that at the very base of the pyramid, and all the way up to the self-actualization. The luxury items and the fancy handbags and fancy cars are right up there at the top. So for now, as a leader, how you show up to make your team feel safe. And again, in the data Donal showed, he talked about the social, family and health are more important than all this spending. So it's very important to recognize, first and foremost, if you're in fear, and to find a way to come out of it. Speak to an advisor to help you come out to see what you need to get done. I'm not going to spend a lot of time on that because I want to show you what an engaged workforce or lack of an engaged workforce looks like. Globally, this was a LinkedIn survey from a couple of years ago, from last year, backed up by Gallup, which is really solid data on people. Only 13% of people are highly engaged in businesses in Ireland, and that was before we went remote working, and that's before we've all been working in our homes for the last 3 months. So how engaged are your people? How are they showing up? Basically, the guys in green are fully engaged. They're very clear on the results that the company wants and are totally in behind it. The guys in yellow, I liken them to sitting on a boat having a gin and tonic. So their weight, you're carrying them, and there's always a saboteur in your business. So it's very important to flush them out. And I said at the start, change the game, change the culture. You as the leader, as the boss, are in charge of culture. What's this costing you? It's costing you a massive 34% of your labor cost and your salary bill. So think how much you pay out each month, each year, and how much you're going to pay out for the second half of this year as you rebuild your business. But we have strategies to change people from being in the red and yellow all the way to being in green. And when we do this, and this is a live example in Ireland through the first 5 months of this year, a couple of companies, you know, are 30% ahead year on year and not gone down because everybody's aligned and shoulder to the wheel. In our bodies, we've got 2 major organs. This is how it works, guys. We've 2 major organs. We rely on people to come to work and use their brains to do the thinking, operate the systems, that they deliver the products, stack the shelves, do the audits, wait the tables. But if your brain isn't working, your brain won't work if your heart isn't pumping. So this is where it's about the culture, the engagement, the values, your leadership and communication style, and the experiences you draw into your company. So we're human beings. Our brain does not work if our heart isn't pumping and engaged. So again, please don't ignore the softer side of business, because when you get it right, your business just soars. Absolutely. It's about strategy and culture working together. It's not one or the other. They are both mandatory. And I love this. Think how good you are in terms of your leadership style in creating a good culture. Very, very important. We heard the guys say it earlier on, communicate visibly and remotely. Video and Zoom and all of that is really, really important with all of your stakeholders. And that's the people, your employees, your customers, your banks, run surveys, but just be really, really visible. It's so important for the leader to be visible, and it's happening really wonderfully in some organizations, and in others, it's scary because 90% of people were in that absolutely terrified place. What will we do? Was about personal safety at the start. And only 10% of people were thinking with their actual cortex, the brain part of their thinking creative solutions. So it's very important to move out of this fear place. It's a part of your brain called your amygdala, and it's a physical process. So it's important, use this model I'm going to share with you in a minute to find your way forward in the business. Okay. Can we get rid of that? Excuse me. Sorry. Let's get this back. Can't see the screen. 1 second. There we go. Here we go. So how do we do this? We start with clearly defining the new results that you need. Now it's all about short-term results, achieving your short-term results to succeed. You can lead with certainty then, decide what can be achieved with your team, set a new target for the next 3 months and then for the latter 3 months of the year. It doesn't mean you're abandoning the big 3-year plan, but we've got to be able to see what we can achieve really clearly over the next short term. Here's a model to build a positive culture in your business. The experiences you create in your business as the absolute platform will drive and create the beliefs your team have. From those beliefs, they will actually carry out the action plans and deliver to get the results in your business. But if you just focus on the results and the action, that's a classic management trap, saying we'll just do things differently. You've got to focus on the beliefs of your people, the beliefs of your customers about how safe it is to come back in and do business with you. So be very conscious as the leader of the experiences you're creating. This is culture. And be also very conscious that right now, we need a shift in culture. We need a shift in the new results. So you are in charge of leading that new culture to create new experiences for your team, for your customers, for all the stakeholders, for your bankers, for revenue. So you create the beliefs and decide on the new action plan in these clearly defined results. So do ask yourself this question as you sign out of the webinar and say, well, what belief do you need your people to hold right now? What belief do you have because if it's a negative one that will hold you back, that's the result you're going to get. Whereas if you come in a very positive way with a new game plan, you will achieve great success. This is a second model that I'm just going to introduce you to, and it's very, very powerful to move forward right now. We call it the above and below the line model, and it comes from our global partners in leadership. We are working with half the Fortune top 50 companies in North America at the moment using this model. So how it works is we get people to move out of this frozen, oh my God, shock and panic, what are we going to do? And we play the blame game with them. We do these in virtual trainings and it's great fun. So we do some brainstorming and we get people, the business owner and everyone, to move forward from, let's ignore and deny that the world has changed and we need to do some new things in the business. Let's move out of it's not my job. Let's talk about finger pointing and saying, well, that wasn't really me. Let's make sure that we're not confused. Tell me what to do. I'm not quite sure what I should do. Definitely let's move away from cover my tail, CC the world, but don't make those solid actions to move forward. And this is a really scary one. It is not a time, guys, to wait and see, because this is where people have been stuck and those who are going to really suffer in the long run. So it's about moving from below the line to moving to above the line, to see it. What do you see that needs to be done? What's the actual reality in your business? Where are the opportunities? How are you going to own it? How will your team own it? And if there's a level of resistance to the new way forward, it's very important that we take them to own the new success, own the new results, solve it, what needs to be done. And when you get your team or your top 10 or 15 people around a table together, a virtual table, obviously, you can solve everything and come out with a plan to get on and do it. So then you have a new language where you're talking to your team about what do we see, how are you owning that, you know, that you're not listening to reasons why or wait and see, and you come up with solve it. What else can we do to make this success and get on and do it? Which brings me to two last key points. Doing the job versus achieving the result. Ensure is your people are either coming back into your workplace physically or continue to work remotely. Make sure that you have clarified the new key result and that people are working all towards that, and it's down to a couple of key metrics, rather than everybody saying, oh my God, I'm working so hard. Your teams are almost burnt out. We're halfway through the year. Many haven't taken holidays. Show them you care and clearly define the results where you can win, so that you're operating, doing the important things to achieve the result, rather than doing, oh, just doing the job. Huge difference in it. We started and I talked about lace your business. So that leadership, accountability, culture, and engagement. So here's a question to ask you, and it's my closing point. Positive accountability is, rather than saying who's accountable for failing to achieve the result and it's a negative thing, how about asking your team who's accountable for achieving this result? And I talk about it, say we get to Christmas and please God, we can be in Grafton Street and have a gin and tonic to toast the survival and the success of this crazy pandemic year. And if you were to ask your team saying, how did we make that happen? This is what I'm talking about. When you approach the people point of your business and have a plan for that, just as solid as the financials, the sales, the reporting, the tax, the compliance, all of that, then you will absolutely succeed. And you will be giving each other a cheers and a toast to say, how did we make that happen in such a fantastic way? And that's why I'm delighted to be here to give you some solid tools to plan your people as you move forward. So I'm back to Donal and to some questions. And I'm sorry I galloped through that, but conscious of time.
Perfect. Yeah, so
just on mute again, haven't I? Yeah, thanks Marina for that, and I do appreciate you picking up the pace to get us through on time. And I know we're probably overrunning, but I think it's valuable to just go to a question and answer session. I think the value of culture and leadership is going to be absolutely vital in moving businesses forward, and in establishing a good firm foothold for the opportunities that are going to arise going forward for people. So I suppose we'll probably go to a question and answer session now, and Tig is going to run that for us.
Perfect, guys. Yes, so thanks very much. And again, we got some great questions through directly to the panelists and one or two in the main chat bar. And we have some for Shane and David. But Marina, I might just start with yourself. We have one question here from Robert, I think it is, he says his name. So it's how can you achieve results in the short term and align your team? What are some examples to achieve results in the short term and also align your team?
Thanks, great question, Robert. We run a virtual training, essentially, where we clarify the key results. We bring it into 3 metrics maximum, 3 numbers, get everybody aligned on the same page, and we work through that the results pyramid to get to the new culture, deciding how we need to behave, changing how people think and act, creating the correct beliefs to move forward, and absolutely bring in an above the line culture to make it happen, focusing on doing the results, achieving the results rather than just doing the job. So it's very, very process driven and it's delivering results.
Perfect. Thanks, Marina. And I've one or two here for Shane. One Shane from Claire, and she says, can you switch employees who were on temporary layoff and claiming the pandemic payment to the WSS as they return to work after May 4th, obviously?
Yes, you can. You can switch them off the pandemic unemployment payment and onto the temporary wage subsidy. There is a process on the payroll that you need to follow to do that, but you can transfer them across.
Great, so Shane, and another one just for yourself. So hi folks, this is from Owen Kinsey, I think. Really enjoyable webinar. Quick question for Shane. How have you found employees are dealing with overtime and different working hours and the interaction and the wage subsidy scheme? So how are employers dealing with this? Yeah,
this is one of the main issues that people are coming across as they start to take employees back on. The hours they're doing now are varying from the average weekly net pay as calculated by the revenue as part of the wage subsidy. So really what you need to do is you need to look at what the average weekly net pay is and what the amount of hours that equates to now to work out how much you can actually, or how long you can actually have that employee working for. The main issue is around overtime, and if you have people working overtime now, you'll find that they're going to be getting paid more than likely than what their average weekly net pay for January and February was. And if you go over the average weekly net pay, you'll either receive a tapered relief or no subsidy at all. So that you do need to be careful with that.
Perfect. And just one more for yourself, Shane. It's from Paul Murphy. So Paul's asking, question with the warehousing, can existing installment basis arrangement be included? Also, are you encountering payslip issues with the COVID-19 scheme?
Existing arrangements are dealt with separately. So you will already have an existing arrangement and a payment plan in place for that. So they are dealt with separately. If you have an arrangement for something that occurred early in the pandemic payment, then you could look at rolling that into the new warehousing scheme. The second question on the payslip, the issue we've seen with payslips is that for most payroll packages, for people who are on hourly rates, when you put them on the COVID, it doesn't give them any hours at all. So if you have an employee who's looking to see, well, how many hours have I been paid for, they're not actually getting that information on their payslip, which is, I know we've encountered with a few clients where they've had all the employees coming into them saying, well, what have you actually paid me for last week? I can't actually see it on the payslip.
Perfect, thanks, Shane. And one or two for David earlier on. So I'll start with the smallest one first, probably. So you mentioned private equity. What do they do for businesses?
Yeah, so private equity, just touched on it. They come in, they take an ownership stake in your business, but they help professionalize, and sometimes businesses are not ready to step to grow to an extra level. They help professionalize perhaps the finance function, or they help open doors into other markets. So they can either sit on the board themselves, or they appoint a non-exec director to sit on the board and help with governance in the company too. But they're very much not just the capital. They want to work with you, and it's a partnership approach to help you grow. That's what they do.
Perfect, Dave, thank you. And also for yourself again, so you mentioned statistics. This is from John. John Luke. So you mentioned stats on SBCI approvals versus drawdowns, and the difference is stark. What are the banks saying about this, and what are your own clients saying about this? Yeah,
like the banks have said they've been given guidance from the government and from SPCI that they have their credit approval program. So they will lend money on a rational, judged basis. So even though there is an SPCI guarantee in place, or it's coming from the SPCI, they still don't want to be going back to the government looking for a guarantee to call in a guarantee. So they still want to make good lending decisions. So where that's coming from the banks, clients and a customer I spoke to yesterday is very frustrated because he gets through the SPCI stage and then still can't. And those stats are quite stark. It's nearly 3,000 people through the SPCI stage with only 300 people drawing down. So there is a miscommunication here. But look, the banks are there to support, but it is to proper lending proposals. So the message really is to be prepared. It's not just as simple as filling out a form online. You need to be prepared with your cash flows and your historic financial results and projections to approach a bank or any funder.
Great stuff, Dave. Thank you. And then I've one for Marina to circle back around. So it's from Jim. So thanks, Jim, for the question. Is the 13% that you mentioned in your slides, is that for highly engaged employees? You might just elaborate on that point.
Absolutely. It's a Gallup study, and Gallup are considered one of the international organizations for measuring engagement. It's a very detailed report, and only 13% are highly engaged. So that's the ones in green, absolutely. So the other people are weight on your boat, like they're passengers, you know, and it's a bit like a tree, you're either growing or you're dying. So if people aren't going the extra mile for you now post-COVID as you're into recovery, it's just such a waste of resources, but it's going to demand of every person on this call that they become a really extraordinary leader of yourself and improve your own leadership skills to communicate more effectively and manage these people. And I guess that's why we're getting huge interest in the process of bringing in this positive culture of accountability, because once we bring people through that and immerse them in it as a team, they can't say, I didn't know, it wasn't my job, finger pointing, because it's not tolerated. So we just banish that out and we move people straight away that they can't be saying, oh, I didn't really know. Wait, let's wait and see here. Let's just wait and see and be a passenger. So it works beautifully to move people from that 13% down.
Great stuff, Marina. Yeah, and some good feedback in just to the panelist chat as well, and one from Kevin into the main chat said, well done everyone, very informative webinar, great guidance as to what supports are available and the need to engage early. Thank you. So that's I think that's the majority of the questions answered. If anyone has any final ones, feel free to throw them in, but if not, I might pass it back over to Donal. And yeah, thanks everyone for the interaction and engagement.
Very good. Thank you, Tag. And maybe just one quick one for you, David, and one that comes to mind is, from the time you had approached the banks, how quick is it till we can get the cash?
Yeah, it's a very good question. The banks have their processes, and that's why the alternative lending market came in, because they were able to say they could make decisions quicker. But I would say, you need to leave around 8 weeks to get through a bank. So you go in prepared. They'll have their financial models, or as what we do when we're working with clients is prepare an information memorandum, which is almost like a mini credit paper. Helps the banks get into their credit committee much faster. But it can be slow. So it can take a number of weeks to get through a credit process. And then when you're through credit approval, there is a legal process, which can take a long time too. So I think at best, it could be an 8-week process from start to finish. But, obviously you can go do things faster if there's a need to do things faster. But normally around, 8 weeks and can be longer depending on the credit process.
And is that any quicker, David, if you're using the government support schemes?
I'd expect, what the banks are doing now they've given moratoriums on their debt. So, your interest in capital has been parked or put aside, although the key point here is your interest is still rolling up. It's not going away. So your debt is getting worse. But those decisions are being made quicker to help businesses. And that's what the banks have told me. But they're quick decisions. But getting a full credit approval will take a little bit longer to get through. The credit process will obviously have a large discussion around COVID and the likely impact on the business. So you need a very strong business plan, and the banks will be cautious about lending 5-year money and 6-year money out post-COVID. But yeah, that early decision can be a lot quicker.
Very good. Thank you. I suppose that's all we have time for really this morning. Sorry for running over on time for a little bit. Thanks to everyone that joined us. I hope they found it beneficial. As always, we're available in PKF offline to talk to anyone, to help any problems. And I think early engagement is what we're hearing. Make sure that your information is up to date. Make sure that you engage with your team, with the culture of your team, to progress your business. And I'd like to finally thank our panelists, Marina, David and Shane, for talking this morning. Look, engage with us as soon as possible and we'll help as much as possible. Thank you.
Great. Thanks, Donal.
Thanks, everyone.
Thanks, everybody. Thanks for participating. Thank you.
Thank you. Bye-bye.
All right.